Are you tired of losing trades in binary option? The problem might not be your strategy, but it might be the trades you are choosing to take. Most traders enter the market without properly filtering their setups, which leads to unnecessary losses. And in this video, I'll show you how to identify high quality trade opportunity and avoid low probability trades before you enter the market. Watch until the very end because mastering this simple filtering process can dramatically improve your trading results. Alright traders, we have a perfect setup going on here. The market is currently ranging between a well-defined support and resistance zone, which I have marked with a rectangular box. As you all know, the upper level is our resistance and the lower level is our support zone. This is a very clean setup, and in my opinion, this is one of the most easiest opportunity to spot on. Based on the current price action, I'm looking for multiple put entries. As I have already mentioned before, the market is clearly ranging and the overall direction, the level is very clear to me. Back to back two red candle from our resistance area. So market has equal tendency that it can print one more red candle to our support level. I have taken multiple put entries right at the opening of the candle along with one additional entry as my marginal safety position. I can see buyers are stepping into the market, but this overall market structure is still ranging. I'm expecting the candle to move lower. In fact, I'm looking for an inverted red hammer form at this level. You can clearly see the rejection is happening from both of the side. Buyers are stepping in, but I can equally see that sellers are stepping in as well. So as I've already said that the market is ranging, I'm expecting one more red candle before the market prints green candle. And just as I anticipated, the candle is closing as a red inverted hammer, and that was a winning trade. Now, at this very point, I will not be taking any more put entries because there is a pattern going on which you must avoid. We have got two back-to-back red inverted hammer. Whenever you see this pattern, market can reverse. As you all know, hammer is a reversal candle, okay, and market is ranging. Even though this current candle looks very healthy, very bearish, but at the very last moment it can reverse and become a green candle. So I'm not sure about the current candle situation, which is why I'm avoiding any more trades in this market. So what the pattern I was telling, this particular two red hammer candle, this is an inverted hammer candle. So whenever you see a hammer candle, especially when you see two inverted red hammer candle, even though the market is ranging, market can print one more green candle at this kind of situation. And just look at that, market did exactly the same. Okay, so I avoided taking unnecessary trades at this moment. Alright traders, I can see another great setup developing here. The market is approaching a very strong supply zone. Instead of marking it with a single line, I'm going to draw a rectangular box and highlight the entire supply area. So this rectangular box represent our supply zone. Okay, this approach helps you to visualize the zone more accurately and makes it easier to filter out low quality trades. Now take a look at what happens when the price reaches to the supply zone. We immediately getting a red candle. This tells us that the sellers have stepped in into the market and they are actively defending this area. And whenever you see a red candle around the supply area, you can take same direction put entry trade. In this case, the sellers are present here giving us a bearish buy. So I'm looking for a put entry and I've taken a put entry directly at the opening of the candle. As I've already said, rather than placing one single line as a resistance zone, you can place a rectangular box entirely as a supply zone, because on the left hand side you can see big red candles had been formed and that particular level will act as a supply zone. Okay, the top of the market is always the supply zone, and whenever you see a reversal happening from a supply area, you can take same direction trade. That will be our trade on second candle strategy. Okay, this is a high probability trade setup, which is why I've taken a put entry directly at the opening of the candle, and just as I anticipated, this trade is going in my favor. But after this trade, I will not be placing any more trades because all the area below is buyers area. Only the top of the chart is our sellers area, which is why I've taken a put entry. Now you see on this particular left, this leg, there is so many buyers present, so market can reverse from anywhere until and unless we approach the market to the lowest level, we can see for call entry. But for now, we will not be taking any more put entries or call entries in the middle of the loop. I am going to look for another high probability trade setup, and in this particular currency pair I can see a trade setup going on. Market now is in a seller's loop, but we have got a break, that is market structure shift. I will explain that later, but first let me place a trade call entry trade directly at the opening of the candle. Remember guys, I've only taken one call entry trade here, managing my risks because market can go either direction here. Why? Because market major trend is downtrend, but here market has reversed from a support area. We've got a market structure shift, that is there is a break with a healthy green candle, which is why I'm biased towards buyers, a green candle. That's why I've taken a call entry. And even in seller's loop, you can see there's a pattern going on: one red candle, two green candle, one red candle, and two green candle. Based on this confirmation, I've taken a call entry. However, I was not 100% with my trade, which is why I've taken only one call entry. And look at that, I am going in loss with this trade. Now if I lose this trade, I will not be taking any more call entry, because now I know that market ultimate target is down to the support area, which is why I'm going directly with back-to-back put entry as my one-step martingale trade. Okay, now here I've taken three back-to-back put entry trades. Why? Because I'm sure that the market next direction is down, which is here, the horizontal line, which is our ultimate support area. The last red candle was a healthy bearish red candle as well, and market did not follow the pattern which I mentioned. Market usually doesn't follow the pattern all the time. Okay, you have to understand this. So don't follow blindly with the pattern. See what the current candle is doing, and based on that analysis, I've taken my put entry, back-to-back put entry, three trades in a row, because I lost one. To recover that and to book profit, I've taken this trade, and look at that, just as I anticipated, this candle is turning into a red candle, and this is a winning trade. Alright traders, I hope you understand how to filter the trades. You can copy my trades using the link given below in the description box. These all are my trades, only one loss. I'll come back with another powerful video. Until then, keep learning, and as always, happy trading.